This episode is different because it's not just for entrepreneurs. We're going to be teaching W-2 employees how they also can live tax-free. What's up, family? Welcome into another episode of Tax-Free Living, where we're going to be teaching entrepreneurs just like you how to live tax-free. So before we get into today's episode, please hit that like button, hit that subscribe button, and share these episodes with a friend. I really hope that you all are really getting a lot from these episodes. I love teaching. YouTube is a platform that gives me just more time to go into the depths of these strategies, because on platforms like Instagram and TikTok, I can't really go into deep detail because it's short 60, 90-second clips. But with YouTube, I can dive deep, and I'm loving it. And I really want to know your feedback. So if you wouldn't mind hitting that like button, hitting that share button, and commenting below on what your feedback is, so we can try to make these episodes better for you. Okay, so without further ado, today's episode is going to be teaching W-2 employees how they can also leverage the tax code to live tax-free. So as you all know, I have this mantra that I say all the time, that if you want to win the game of taxes, you have to be on the right team. And the tax code was made for entrepreneurs and investors. The tax code is not made to benefit employees. And from my experience, it can seem kind of daunting for a full-time W-2 employee to start a business, because businesses do take a lot of time, a lot of energy. But what they forget is that they can just, instead of becoming an entrepreneur, they can also become an investor, right? Something that takes less time, but a little more capital. And they can also be on the right team and take advantage of tax deductions, tax credits, and other tax strategies. So today we're going to be teaching you all how you can go from W-2 employee to an investor and be able to save thousands of dollars in taxes, okay? As far as investments goes, real estate is the most tax advantaged asset there is, okay? I don't care about stocks. I don't care about crypto. I don't care about buying and selling collections. Whatever asset you want to take, real estate is the number one tax advantage asset that there is on the market, point blank, period. Now, why is that, right? Well, the reason is because real estate gets to take advantage of this tax deduction called depreciation. How does depreciation work? On residential real estate properties, you are able to depreciate the property over 27 and a half years, meaning that the IRS is going to give you a tax deduction for 27 and a half years for this property having wear and tear over the years. And what's really crazy about depreciation is that the property can appreciate in value while you are simultaneously getting a deduction as if it depreciated in value, right? So that's one of the amazing reasons why I love depreciation so much. If you bought a $500,000 property, right, that you were planning to rent out, long-term rental, right, you would get to depreciate that property over 27 and a half years. So you would take the $500,000 and you would divide 500,000 by 27 and a half. That will get you an answer of a little over $18,000. So that means the IRS is going to give you a tax deduction for 27 and a half years of $18,000. So let's say that over 12 months, your property made $10,000 in profit, right? After expenses and all that stuff, you had $10,000 in profit. Now, after this depreciation deduction of $18,000, it would completely wipe out your $10,000 in profit, right? So you would have $10,000 in your bank account, but on your tax return, you will actually be showing an $8,000 loss, because 10,000 minus 18 is an $8,000 loss. So this is one of the strategies that I love teaching, which I call earn in pocket, lose on paper. You literally have $10,000 in your pocket, in your bank account, but on your tax return, you're gonna lose $8,000, right? Now, here's what's interesting about this, because what most people don't realize is that losses from real estate get subtracted from any other income that you have elsewhere. So let's say you had a W-2 job, right? That $8,000 loss will get subtracted from the W-2 income that you made at work. So it will lower your taxable income. And the lower your taxable income, the lower your tax bill is gonna be. So not only are you gonna be earning money in real life, you're actually gonna be paying less taxes every single year while building your asset portfolio. This is why real estate is one of the best assets that you can invest in, because you make money, you get depreciation, which makes you save on taxes, and you're building your asset portfolio to be able to borrow against in the future. We ain't gonna talk about that today. What if there was a way that we can accelerate our depreciation, right? What if there's a way where instead of only being able to take $18,000 worth of depreciation, what if we could take more than that? Wouldn't that be great? Because a bigger deduction today is always better than a bigger deduction later. So, is this possible? Absolutely, right? And that's where we introduce something called a cost segregation study, right? That's when we introduce a cost segregation study. So what does a cost segregation study mean? Well, a cost seg study is just a fancy way to say we're gonna accelerate the depreciation, right? So with the proper cost segregation study, you were able to deduct, drum roll please, 30% of the purchase price of the property the year that you purchase it. Say what? So instead of only being able to deduct 3.6%, we basically 10x that, and with the proper cost segregation study, you're gonna be able to deduct 30% of the value of the property in year one. Crazy. So how would this change your tax situation? Let's do another example, okay? So let's say you were a W-2 employee, right? Making $120,000 a year, right? Pretty good salary, right? So at this salary range, you're probably gonna be at a federal tax rate of about 25%, assuming you're single, right? Then you're gonna have to pay state taxes, depending on where you live, which could be another 5%. But then you're also gonna have to pay self-employment taxes, which is 7.65%. So on this $120,000, you're gonna have a tax bill of about $45,000, okay? You're gonna have a tax bill of about $45,000. That's a lot of money, right? That's a lot of money. But wait, let's say you came to Carter's tax-free YouTube class and you learned about purchasing real estate and leveraging cost segregation studies, right? So let's say you purchased this $500,000 property, and let's say you ran a cost segregation study and you were able to write off 30% of the property's value the year that you purchased it. If we do $500,000 times 35%, that is a depreciation deduction of $150,000, right? Now, with bonus depreciation, you're only gonna be able to take 80% of that $150,000 deduction today. So 80% of $150,000 is, drum roll please, $120,000. But wait a second. We made $120,000 at work, but we bought a property, ran a cost seg study, and our depreciation tax deduction is also $120,000. So $120,000 income minus $120,000 tax deduction brings us at a taxable income of $0. So guess what? Now we're gonna wipe out all of our tax liability, and we're actually gonna be getting a tax refund of $45,000. Crazy. So guys, like, this is what I mean by like, welcome to tax-free living, right? I don't call this channel tax-free living for no reason. Like, if you wanna pay less tax, simply change the facts, right? And the easiest way to make more money is to pay less taxes. So by buying a property and leveraging a proper cost seg study, you can literally wipe out all your taxable income at work. Now, there is some caveats to this strategy, okay? And the caveat, one of the main caveats is this. The IRS says if you're not a real estate professional and you don't have real estate professional status, you can only take a max deduction of $25,000. So in order to qualify and have real estate professional status, you have to do three things. You have to have 750 hours of hours in your real estate business. You can't work any business more than the real estate business. And I forgot what the last one is. I don't have it in my notes. But obtaining real estate professional status is damn near impossible if you have another stream of income like a W-2 job, right? So if you can't get real estate professional status, you can only take $25K of this $120,000 deduction that we just talked about. So is there a way that we can work around this? Of course. If you learn the rules of the game, you'll be able to win the game. So one of the ways that we can work around this is by taking advantage of something called the STR strategy, which basically means the short-term rental strategy. So instead of having our property be a long-term rental, we can change our property into being a short-term rental. And if we can pass these three tests, there will be no limit to our tax deduction. So in order to leverage the STR strategy properly, you have to do three things. You have to have an average stay at this property of 7 days or less. So on average, people can't be staying there more than 7 days. You have to prove that you are working there 100 hours more than anybody else. So like, go visit the property, go make updates, do the books while you're at the property. You have to prove that you're spending 100 hours more on that property than anybody else. And then you can't be offering substantial services like changing sheets every day at things like hotels. If you pass these three tests, you are able to take 100% of the depreciation deduction, which means you can wipe out all of your W-2 income, get that $45,000 tax refund. Then guess what we're gonna do with the refund? We're gonna use that money for a down payment on another property so we can run the same play back next year, okay? So guys, leverage this strategy. I'm gonna be leveraging this strategy this year. I'm looking at about 1.5 or $2 million property I'm gonna purchase before the year ends. I'm gonna turn it into an Airbnb, short-term rental it. I'm gonna get a $600,000 tax deduction for buying an asset. Okay, so if you like this strategy, guys, hit that like button, hit that subscribe button, share it with a friend, and I'll see you all next time. Peace.